Alright. Cool, we're live, we're live, we're live. Alright, so the plan for today is to see if the dollar wants to punch above Thursday's high, right, which is also a weekly high. Now, if we push up, we're likely to pull back down, okay? And then we can get a much better pullback into more discounted prices, right, before we head higher. Because I do think ultimately we are going to see this high here on the monthly. Now, alternatively, I mean, to be honest, what I prefer is for us to get a push down first and then rise higher, right? Because if we get a pullback, then I know, okay, cool, I'm going to look for some buys around here or some dollar strength around here, okay? So same thing when we turn our attention to the monthly as well. You know, we've had a good few bullish months. Obviously, last month was a bearish one. But in terms of any real significant pullbacks, we haven't had that as of yet. So, you know, from looking at the monthly perspective, I'd like to see us at least have a bit of a pullback. So we'll just have to monitor for now and work with what we got for today. Guys, if you're on the live stream right now, I haven't done a live stream in a little while, so if you're enjoying the stream, let's have a conversation inside of the live chat. Come say hello, come say hello. Drop a like on the live as well. Alright, so realistically looking at gold, I'm still looking for lower prices on gold. I was able to get into a short yesterday for gold. It did drop, but it didn't continue as low as what I wanted it to. But that's fine. Now, if I turn our attention over to the daily picture here on gold, right, we're in this imbalance that has given us quite significant pushes, right? The originator of this high was from here, right? The originator of this high was from here. So now that we're in a similar area, there is a possibility, an off chance that we do actually go higher. But in terms of looking at the structure, we have just broken the low. So if we do head up higher, it's only going to be a push up for a pullback and a drop down lower. Good luck. What's happening, Niraj? What's happening? You good? Gifts. Well, go on, money day, my bro. You good? What's happening? What's happening? What's happening? Anyway, so NFP is here. Some alerts for gold are going off. Let's take a look. Okay, so dollar is dropping. So obviously, if you guys remember the game plan, let me get some Bloomberg going. Turn down the music.
Right now, let's head over to Michael McKee with the numbers. Mike, what do you see?
Well, we got a very disappointing number here, and this is going to get Wall Street's attention. 73,000 jobs created during the month of July. The forecast, as you said, was
that's
for
pretty
104,
bad.
and we came down from 147 last month.
That's really bad.
Looking to see what the revisions are. Right now, the three-month revisions
payrolls is terrible.
To payrolls by 35,000, so that has to be factored in. Private payrolls, 83,000. They were 74,000 last month, so it looks like government has subtracted from the overall level of jobs.
Guys, payroll is terrible. I don't think I've seen this big of a difference in a while.
Basically, to the seasonals issue that we
That's
saw in
ridiculous.
June. Unemployment rate 4.2% as
Okay, so
forecast.
forecasted
We're
was
looking at what the
106K.
three-digit number is
The actual
in just
data
a
is
second. Average
73K, so
hourly
it's
earnings
what,
up 0.3 as
over
forecast.
30K,
Average hourly earnings on a
worse than expected.
year-over-year basis at 3.9%. They were 3.8% the month before, so it looks like a little bit of a gain overall for people. I'll dig into this some more and let you figure out how the markets are reacting to this disappointing headline number.
Mike, that sound that you hear, that whoosh, is the two-year yield plummeting, and that is what we're seeing, down more than 10 basis points in response to this weaker than expected number. You can see equities have maintained some of the losses that they saw from earlier, but across the board, a bid into bonds is the big trade. 10-year yields down 5 basis points. The two-year yield, this really is the key moment, down
I'm
12
just listening to
basis
Bloomberg
points
right now.
to 3.84% as people take a look at what this labor market
How
report
is
means
unemployment only at 4%? Should be way higher. Yeah, unemployment should be higher for the current data that we are seeing at the moment. You know, probably maybe a 4.4 or 4.5 unemployment.
14.81 as people assess that maybe this will be a Fed that
Wow,
will be pushed
guys,
into
this
cutting
is a
rates
huge
sooner
move,
and
to be
faster.
honest.
Really, the idea that you could see
Incredible move.
the number come in softer, as well as the unemployment rate also ticking just slightly higher.
Okay, so realistically, we can't go against this momentum, right? We can't go against it. I did say that, hey, you know, I would look for some longs if we do come into this area. But looking at the data, the two-year yields are dropping. Like, the two-year yields have tanked. Let me show you guys the two-year yields.
Jobs lost in manufacturing, and we had seen signs of this coming in some of the ISM reports, and we do get ISM for July coming out at 10 o'clock this morning.
Was it U.S.?
It does suggest that companies in manufacturing at least were not ramping up at all.
02.
Construction, only 2,000.
There we go.
13,000 that were
Guys, look at this.
by ADP and their numbers on Wednesday. So construction,
wow,
not really a surprise given the circumstances and what we've heard about
dollars tanking.
Service producing jobs, 98,000. That's
let's take a look at the 10-year.
But in line with the fact that service producing
10 years down as well.
Majority of jobs in the economy. And then, of course, the number that really has set the tone here.
Look at the bonds. Bonds are up. Yeah, dollar's gonna keep tanking, man.
At the federal level.
This is a big move.
Because a lot of people who left the federal government under Doge got some sort of severance, and they don't count as unemployed as long as they are.
It's a colossal move.
So
this.
we'll see more of that. Overall, government, including state and local, down 10,000, and that is a rebound from last month's 74,000 jobs.
Take a look at GJ.
Most of those in state and local government because of education, and economists think that was mostly because of a seasonal adjustment problem. I didn't mention earlier, but we should point out that the average work week rose by 0.1%, 34.3. And that may suggest that even though companies were laying some people off to keep up with business, they had to work others harder. So a little bit of a buffer on the other side.
As you speak, Mike, we're seeing the two-year yield just plunge that much lower. Michael McKee, thank you so much. So if you are just joining us, here's the state of where we are. We did get the non-farm payrolls
okay.
for July, 73,000.
So here's the thing, right?
We got 104,000 was the expectation. We see that increase in the unemployment rate.
So here's the thing, right? If we look at the euro, okay. Now, with us taking out this low here on the daily, we flip bearish. Weekly took out this low as well, flip bearish. Monthly still bullish. Right, H4 bearish as well. Okay, cool. So ideally, we've got two areas to work with. Right, we've got this area here, and we've got a much better area, much more premium price higher. Right, so ideally, if we do get out of the fib and we swing from high to low, right, we can see that the imbalance above is at a much better premium price that we can look for some shorts. Also, something else that I would look out for is this daily candle here as well. Right, this daily candle here can act as a breaker for us for a move lower. Guys, if you're in the live stream right now, don't forget to leave a like on the live. Don't forget to leave a like on the live. Anyways, as at least for now, let's just take a look at what price is doing exactly. Wow, look at that candle, boys and girls. That 5-minute candle on EU is 116 pips. Wow. Let's take a look at gold's 5-minute candle. Gold's 5-minute candle is almost 300 pips. Insane. So looking at the M1, not a single bearish candle as of yet. It's just still going. We might have to buy gold, you know. We might have to buy gold.
73,000 for non-farm payrolls, weaker than expected, 4.2% unemployment rate ticking higher. What is the line in the sand for this unemployment rate that Jay Powell is saying is what he's mainly looking at, the main number? I think we're talking somewhere between 4.3, 4.4.
What are you guys' opinions in the chat? What are you guys' opinions? What do you guys think about price so far? What are your opinions? What are you guys looking at?
Is this the dissenters saying that the labor market is weak? Is this a hat tip, a vindication of that? I still kind of think that it's a little bit political. However, the data do happen to be consistent with that.
Let me know in the chat, guys.
If it's consistent with that message, but it's still political, how much weight can you put into that? If they continue to go forward, and you have President Trump, who was on Truth Social this morning, saying that the board needs to take over, that they should be the ones dictating.
Okay, you're looking for a slight move up.
To get more of the dovishness from the board,
but still bearish, eyeing up some shorts. Okay. Niraj, where are you looking at exactly? And which pair as well? Which pair are you looking at as well? Are you inside of my Discord, by the way?
Right. So if you start to hear more dovishness from the rest of the committee, I would imagine Powell will also feel the same way, because that would be consistent with the actual data. Those two members in particular were.
You're looking at MNQ, not FX. MNQ, what is that?
In recent times, the rest of the members, if they start to become more dovish, I imagine Powell will be.
What is MNQ, bro?
Because the data continue to show that the employment backdrop is weakening. Meanwhile, we're looking right now at markets. The 2-year
Nasdaq. Okay.
Down 15 basis points to 3.
What is the stock market doing, anyways?
You have seen it come
We're not seeing a huge reaction.
I just wonder if this really does set up September in a way, Stephanie.
I wonder how stock futures. Yeah, I got you. I wonder how the NYSE Open is going to play out, because yesterday we had a huge drop yesterday. I entered a short somewhere here.
Yeah, I think that's totally fair.
I think here.
And if you look at the
this candle.
The household
end up taking profit around here, but then some hours went by and I look at it and I'm like, damn.
So I think this is exactly what we're seeing.
And obviously this morning's dropped some more, so.
Policy having effects on the labor market. Stephanie Roth of Wolf Research, thank you so much for being with us on this non-farm payrolls day on this Friday.
Let's see, Nasdaq.
Michael McHugh has been parsing through all of the details. Mike, what have you found as you've gone through it?
Yeah, left a lot on the table, literally. Nasdaq's very high. I mean, even if we do get a pullback, it's definitely, I reckon, a short-term move.
In the labor force. Now, of those who dropped out of the labor force,
right, weekly can definitely come down a lot, but
in the foreign-born category,
let's take a look at
so
daily.
A major drop in the number of people who
it's trading at all-time highs. Yeah.
In, their participation
really high. But then again, that's what we're in the market for, especially if you're in, the SPOOs or the US 30, the Dow or the Nas. You want to see it break all-time highs and keep pushing up, when there's a crash or price starts coming down, everyone starts, getting scared and looking at their investment portfolios. I'm down 20%, oh no.
Deterioration in the U.S. labor market.
Yeah, Lisa, good morning. Right now there are 2 full cuts. Again,
I reckon if we can get a little bit of a pullback across the board, not like a really high pullback. I just think like a shallow pullback. Probably look for this to melt some more. Finish that weekly candle is very full-bodied bearish candle. Looking at the Nas there, even when I look at the Dow.
We discussed it a month ago, Lisa, that
Yeah, if we can continue to finish a very strong bearish weekly candle, I think that'll be pretty good for business.
That a 0 to 50,000 monthly gain in jobs is the new normal. That's the new run rate. And here we are with those revisions.
If gold closes above this high on the H4, right, I'll be looking for some longs. That would confirm the breaker structure.
Is pretty sticky. The hours worked ticked up. The earnings, the wages ticked up.
I do have a slight inclination, a slight feeling that we may get a drop somewhere around this 4-hour candle. Obviously, now that gold is taken out that high there, can we start to see gold let off some steam and drop a little bit? We'll have to wait and see.
But we're just kind of decelerating into a lower.
But for now, I don't think there's any moves until New York Stock Exchange open.
Right? If you look at consumer spending so far in the first 6 months of this year, Lisa,
I think if we can wait for that, then we'll have a much better understanding of where price wants to go. Obviously, right now we are seeing the reaction from the news, right?
This really low growth world right now that we've been expecting.
Well, the participation rate is down. As you say, unemployment rate up in July despite the exit of people from the job market. Isn't that worrying for the Fed? Are they potentially behind the curve right now?
You know, it really depends, right? This is the conundrum that the Fed has, and I actually give Powell credit for talking about this, that if job growth is weak, but the unemployment rate, the balance between the supply and demand for jobs isn't that out of whack, meaning the unemployment rate ticks up to 4.5 and stabilizes there, you know, that's something I think the Fed would generally characterize as relatively full employment. I think it's when it starts to shoot toward 5, and certainly if we see a 5 handle, they'll probably be cutting in earnest, you know, not talking about 25s and 50s, but, you know, getting that funds rate down to 3 really quickly.
Even so, Mike, just looking at some of the details, it looks like healthcare accounted for 75% of the gains that we saw in this employment report. It was the main engine of growth. Is there a concern about the breadth of jobs being added? Should we add that to the ledger of reasons to be concerned about this labor market?
Yeah, absolutely. And this is something that certainly my colleague Tom Porcelli has been speaking with you about for months now, that if you take away government jobs in healthcare, i.e. the kind of non-cyclical, you know, structural jobs, the cyclical job growth has been really weak all along throughout the whole year. And this is just really a continuation of that trend.
So what do we do from here, Mike, if we are still in this period where there is some weakening, but it's not weakness? The rally that we're seeing in the front end, is that something that you'd want to chase at this moment?
Yeah, you buy bonds, right? I mean, it's a big, beautiful bond market, and returns have been substantial, and they're going up, right? Yields are really high, and we've been certainly advising clients, you know, take advantage of these rates while they're high. I mean,
oh
you
yeah,
know,
guys, and also Bitcoin dropped last night.
You know, my new tagline is "Don't fight the triumvirate."
I went up to get
right?
some
You have a
water.
president, a Treasury Secretary,
you know, late
and
night
ultimately
mid-water drink.
a chair of the Fed.
And
all think
obviously
rates
my alert
should
went off. I was
not
like,
be,
ping.
again,
I was like, whoa,
25
what's
or
that?
50 basis points
I'm seeing
lower,
Bitcoin has
potentially
finally
hundreds of
dropped
basis points lower. And I
beneath
think
this
that
low here.
maybe will be realized over the next
Obviously, there's a nice little
certainly people are buying
potential
bonds today. We can see that across
reaccumulation
the
here.
curve, although much more
We
so
have
on
this
the
low,
front end. When you say
swept,
buy bonds,
low,
I am curious
swept.
which bonds. At what point
So
you
there's
can
potential
really
here for us
start
to accumulate
extrapolate
higher
out
again for
longer
Bitcoin,
term,
but
10-year,
we'll have to wait
30-year
and see.
rates and say it's a good time to lock that in at a time where there's still a
Obviously, we are
longer-term
trading at
questions
all-time highs for
about the
Bitcoin, so
tariff
it's a
rates
little
that we
bit
got
difficult.
last night, how long-term inflation
Next
it'll
up
be,
is
especially
ETH.
if the
ETH is
Fed
also
is
doing
prompted to
okay.
cut rates.
You know,
yeah, I mean,
getting
really
closer and closer to
across the whole
4K.
curve. Obviously, as you're seeing today, that 2, 5, 7, 10-year, that kind of short intermediate part of the curve
Guys, if you're
comes
not
crashing
in
down the most. That's where you get the most bang for your
still
buck.
get into algo.
Meaning, you don't
End
have
up
to take a
buying some
lot of
algo
interest rate
around
risk to get a lot of
here,
benefit.
around like
But the whole
26
curve,
cents,
right
around there.
now, the funds rate that's priced in
Obviously,
for the
this
rest
is
of our
dropping right
lives
now, but
is
that's
3%.
fine.
Meaning the Fed gets to 3
There's
by
still,
the end of 2026
more
and
than a
keeps it there, and actually
300%
increases it a little bit for the
increase,
next
you know what I mean?
decade.
To the highs.
What's
I
not
do
priced
think
in
algo
is a
can get
two-handle
eventually
or
in the
a
future at some
one-handle
point
funds
back
rate, right?
up to $3.
That
Right, when you look
realization
at
could cause the
loads
whole curve to
of
kind of
different
come crashing
asset
down.
classes,
you don't want to
ETH
just
has
lock in
not
a
broken
2-year here,
all-time
because then you
highs.
have 2
Yes,
years of
Bitcoin has,
duration,
but ETH
you know,
hasn't.
2 years
So
of
when it's alt
reinvestment
season,
risk effectively.
you know,
I
we'll start to
really, and
see
we've been
potentially
encouraging,
Ethereum.
investors to inch
You
out on
see
the curve and to extend duration,
Sol,
maybe not, go
Stellar
absolutely long to 30-year,
still
but,
hasn't reached the
but
highs
add
of
duration.
2021.
Stephanie Roth of
You
Wolf
know, a lot of
Research still
these
here, and I'm looking right
coins
now at
haven't
some of the
reached the
internals of
highs
this
of
data, and it
2021.
includes average hourly
Okay, H-bar's
earnings
blown it out
that
of the
ticked
water.
up to 3.9% from
See,
the
if you look at
previous
Chainlink, the highs of
3.7%.
2021
You
are
can
still
see
intact.
right now across the board there are still signs that things are
Even
solid.
Solo, the highs
Even
of
the unemployment
2021
rate,
is still
yes, it ticked
intact.
up, but not to the significant degree that some people were worried about. What is the inflationary risk here longer term
Solo
at a
looks
time when the
ridiculous.
Fed
Look at
is
these
being
candles.
prompted to cut from a number of
No,
different
even
reasons?
from where Solo is,
And there still are these tariffs in the system.
that's insane.
Yeah, this is
But yeah, I
it's
do
a
think,
challenge
you know,
because
for pretty
the
much
data that we're seeing is largely
all of these
appears
coins,
to be
they've
driven
got
by
to
immigration,
breach
and that actually
2021 highs
tightens
at
the
some
labor market
point,
for blue
you know?
collar workers. So what we might see is a
Anyways,
labor
back to
market,
gold.
which is something that
Gold's
was
still
kind of
pushing.
known heading into this event, but it's now the reality. It's kind of painful because what we're seeing is job gains that have slowed down tremendously. It results in upward pressure on wages and then upward pressure from tariffs. So it's like a stagflationary type of shock, which we're starting to see play out in the data. It's just a really complicated mix for the Fed to kind of deal with here. So it looks like the labor market is okay. It's not as weak as these numbers today suggest. This is largely driven by immigration in an economy that's hanging in there.
Mike, to that point, maybe the economy is hanging in there, but on the margins, is this buy government bonds, sell corporate bonds?
You know, corporate bond spreads, as you know, as we've all been talking about, are really tight. I mean, you're not getting a lot of extra yield to buy corporates and high yield bonds. And obviously, you're seeing a little bit of a knee-jerk reaction, a negative reaction in the stock market as well. And this, you know, this whole tariff theme is definitely one of not only inflationary, you know, as you know, we just talked about the stagflationary risk is real.
Wow,
but
this
it
push,
can
guys.
certainly result in margin
This push is
pressure
really
for
serious.
companies, and I think that is still to come. And I think we are starting to see some early evidence of that. And obviously that could put some pressure on corporate earnings. That could put some pressure on credit quality and on corporate spread. So yeah, I think higher quality bonds and adding duration are the two themes we've been sticking here. The big question for the Fed, right? And Stephanie, you kind of talked about this. If let's say growth is 0 and the unemployment rate is, 4.5 or 5, but inflation is at 3. You know, what does the Fed do in that world, right? That kind of stagflationary world. And my gut is, the Fed and even Powell, who is a labor market dove, would err on the side of saving the economy, saving jobs, saving the labor market, and write off this inflationary risk as being a one-off. So I think that's the kind of the risks, the way they're skewed.
Mike Collins of PGIM Fixed Income, thank you so much for your time. And before we got this number, we saw a 40% chance of a rate cut being baked into the market for the month of September. And right now we have a 71% chance of a rate cut in September. Joining us now is Jeff Rosenberg of BlackRock. We heard there from Mike Collins, buy bonds. Is that your takeaway?
Well, it's certainly the market takeaway because the market's repricing September, and it makes a lot of sense, and you guys hit on it, and I think it is the takeaway from today's report, which is it's the revisions story. Remember, there's been this undercurrent of a debate about whether non-farm payrolls in the labor market report is really mismeasuring the deterioration, and you see that in these first prints versus the revisions. Waller's talked about it. It's a little bit of vindication here, and that's basically saying his argument may hold sway or convince more people to come on his side of the argument. And, maybe they missed the opportunity in July, but it certainly raises the odds that you get it in September. And that's why you're seeing the big move, as you pointed out, in the front end of the curve.
Well, the president agrees with you. He took to Truth Social and said strong dissents on the Fed board and will only get stronger. Given the revisions, the downside revisions, is this now a trend of this fragility we're seeing in the labor market?
Well, it was one of the numbers that Mike highlighted at the beginning. When you take the revisions into account, the 3-month average change on non-farm payrolls drops from 150,000 average which is really a very, pretty strong labor market, to 35,000, which is, a dramatic shift. Now, as Mike just mentioned, maybe we need to reset what we think is break even. But with the revisions, it's a dramatically different picture to what the labor market is saying. And as also Mike was talking about, you have a pretty strong year-over-year average hourly earnings figure, wage inflation. The market is not caring about that, because I agree with Mike. I think in the debate between the dual mandate of inflation versus full employment, they're going to err on the side of full employment. And that's why, again, I think you're seeing this big move in the front end of the curve, but despite what we're not really talking a lot about, which is the wage number.
Yeah, Jeff, I just wanted to jump in because we had heard from Powell this week, who de-emphasized the non-farm payroll numbers themselves and said, pay attention to the unemployment rate. And we were just talking with Stephanie about this idea of it being impacted more by labor supply and things like immigration. So given that, couldn't you say maybe for this bond market, I shouldn't get over my skis in joining this rally, because we did have things like PCE yesterday, which showed a stubborn rate of inflation?
Yeah, it's a really good point, and he did focus on that, and the unemployment rate, ticked up 1/10, and that was kind of aligned with expectations. But he also said in that press conference that the slowing in the labor markets, even if it's both demand and supply with the equilibrium, raises the risk that the downside risk would be to labor markets. It was a little bit of a tell on, yes, we're in equilibrium now because you're getting both the supply and the demand side falling, but the risk is that the supply side sort of stops falling and the demand side continues. And I think that's kind of what the market is looking through here, particularly around this trend with the revisions, more accelerated than, say, what we've seen in terms of labor force participation, which you mentioned a minute ago, which actually ticked down here again 1/10. But maybe you start to see that stabilize while the demand side doesn't stabilize, and that's the risk that the market's pricing in right now.
Jeff, not all markets are pricing in things equally. I just pulled
just
up what
gotta
the
wait-
future
gotta
session
wait
is
for
doing.
NYSE.
You actually, just looking at the line chart, would not
Nothing
even have
much
any
at the
idea
moment.
that we had any big economic piece of data come
We're
out.
not momentum
S&P
trading.
500 futures are basically at
We're
the
not
level they
following the
were
flow
before. Is this
of
a
market in
that's
terms
not
of
paying
just jumping
attention to
in
the jobs
off the back of the
numbers,
news.
or it's just not bad enough for them to react?
Right, we're just
or
waiting for a
maybe
setup
it's smooth
to
sailing because
form,
it means that we could get
and
cuts. What do
we
you
can
make
act on
of
that.
how risk is not reacting?
I do low-key want to buy
Well, and I looked at
US
some of the
30 though.
futures, and they looked like they were
I do
reacting
want to buy
and
US
and
30
down. I think when
short-term
you
buy.
look cross-market,
I
we
think we
talked
can
a little
probably
bit about
revisit this morning or
earlier this
Tokyo
week.
session.
You got to be a little bit
I
careful
think we can
about
come back
reading
to
into the
Tokyo
equity
session's
market.
range, to be honest
This
with you
is
guys.
very much sort of
Maybe
a
we can get back
macro
up here.
conversation, Fed policy, macroeconomic performance. The stock market is not the economy, and the stock market is not even the S&P 500. It's really the S&P 7 or 6, and then you've got the 493. There's tremendous differential. Look at sort of small cap performance versus, S&P 500 performance, which is, again, it's sort of more dominated by the tech story. So those stories, and we're in the middle of earnings season, they can be much more dominant and reflective of those issues than they are what we're talking about here in the macro data. I think when you look at the 2-year, that's mapping to Fed expectations, and that's a pretty good message. I think when you start looking across into the equity market, you got to be a little bit more aware that, there's other factors going on in this environment of very concentrated equity valuation within the indices that can kind of lead to a misread across from the macro data.
Jeff Rosenberg of BlackRock, thank you so much for being with us. And as Jeff was talking about, the chances of a September Fed rate cut were increasing yet again to 76% now from 40%. Stephanie Roth of Wolfe Research here with us. For a final thought, you've been parsing through all of this. Notably, the 3-month average of the net change in jobs has fallen to its lowest level going back to July of 2020 or June of 2020. What's your takeaway?
I think the labor market has softened. A big part of it has to do with immigration. Another big part of it has to do with government. About half of the revisions are driven by the government sector. So we're looking at an economy that's holding up. Labor market has cooled down. and inflation's going to be heating up. This is a really challenging backdrop for August for risk markets.
And Marie, the president's responding. He's coming out on Truth Social.
Yeah, he's not exactly saying what's happening in the jobs market, but he's signaling this is the reason why he thinks the Fed is, quote,
How's the audio, guys? Audio good?
Too late. Powell is a disaster. Drop the rate.
And meanwhile, the S&P not even responding. It's all about big tech.
No, not responding at all. Again, you would have no idea that this piece of data came out. It is the bond market that is responding, sending us to a more than 70% odds that we will get that rate cut next decision.
Stephanie Roth of Wolf Research, thank you so much. Coming up on Monday, Ed Yardeni of Yardeni Research, Michael Gabin of Morgan Stanley, Michelle Meyer of the MasterCard.
Boy, if they cut rates, dollar's going to pump like crazy,
of
man.
Barclays. This was Bloomberg Surveillance.
Dollar is going to pump like crazy.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas
in terms of
from
Trump,
Wall Street.
I'm waiting for his tweet right now.
You actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
A cidade estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
I do want to buy the Dow, guys. Short-term buy. I really do. Alright, looks like gold might start retracting a little bit. Let's see. where are we? Where are we currently, eh? LTF on the Dow looks bearish at the moment. On the M1 looks pretty bearish. Even the 5-minute candle looks pretty bearish right now, but I do still want to see this climb up just a little bit more. Gold's kind of just chilling right now as we're getting closer and closer to the belt. So we'll just go from there. Still watching, still watching. Liverpool's trying to buy Isak. Yeah, I saw that, you know, bro. I saw that Liverpool was really trying to buy Isak, but to be honest, I don't think Newcastle should let him go. I don't think Newcastle should let him go at all. If they do, it's over. Yeah, Liverpool, I've seen some of their pre-season games, yeah. They are looking sharp. They are looking ready, boy. You know what I mean? Okay, so far I see a potential continuation play here on gold, but it's really risky. Like it's silly to buy gold, but I see a little something that we can take. I'll keep an eye out for that. But yeah, like Wirtz, I think Wirtz has been the signing of the season so far. Like, I think he's been the best signing this transfer window. I'm still vexed that Arsenal got Gyökeres. Why? I don't mind that Arsenal got Gyökeres, you know, because at the end of the day, their manager's still Arteta. Like, you can have all the players in the world, but if you haven't got a manager that can utilize their abilities effectively, it's still not going to do nothing. You know, you still be back to square one. Flipping bearish there on the Dow. Okay. We have about 15 minutes. 15 minutes. 15 minutes left to go. Like I said earlier, yeah, this area has been a catalyst. This imbalance has been a catalyst for quite a few moves. So, you know, the push up that we're getting now is not all that surprising, to be honest with you. Right, I want to see what we do here, to be honest. For gold, might get a little something forming there. Candle was looking incredibly bullish a second ago. Now it's completely turned on its head. Slide, just drop it. So that's the news release. Push all it up. I mean, realistically for GJ, I want to see if we can get a push up from 71% fib. Right? If we can take out that low there as well, that'd be quite good. Is this going to give us a chance or what? All right, 10 minutes, 10 minutes, 10 minutes, 10 minutes. Tesla's down, Amazon's down. Looks like we might have a sell-off, you know. I think for the first time I can say Arsenal might win it this year, bro. Honestly, a striker's what they needed all these years. Nah, man. I doubt it. You see, okay, cool. Striker definitely does help with their bid, you know, and their hopes to finally win a trophy. But at the end of the day, you know, you have to have, like, how do I explain this? You know, when you're a winner, winners, they just win, right? Whether they're having a good day, a bad day, an okay day, they just win because they're winners. And Arsenal are not winners, bro. Arsenal are participants. They're very good at participating and getting, you know, very close. But so far, do you understand? So until I see Arsenal win something decisive, because look, it's been so many years, have they even won anything? Let me see. Has Arsenal trophy in the last 5 years? Yeah, let's see that. It's funny how that's a search. AI powered. Try AI mode. Oh. No, Arsenal has not won a trophy in the last 5 years. Their last trophy was the FA Cup in 2020. They have gone 5 consecutive seasons without winning a trophy. Come on, man. You can't tell me Gyökeres and Madueke is going to be the reason as to why they win the league. Like, they should start with the Carabao Cup or start with the FA Cup. Win those smaller Mickey Mouse cups, as they say, right? And then go for the Prem. Like, you have to get used to winning. Winning is not something that just happens, you know? It has to be ingrained into you, winning. And some people just know how to win, and unfortunately Arsenal isn't that kind of club. Your gut feeling is telling me they will win a cup definitely this year. Okay, let them. Okay, that's fine. Let them win. Let them win something. Sure. Let them win the Carabao Cup. Let them win the FA Cup. I don't care. You know, even United. Right, in the last 5 years, yeah, this is how you know United is a club that wins. Yeah, we won the EFL Cup, right, which is the Carabao Cup in 22-23, and then we won the FA Cup in 23-24 against Man City, and we somehow managed to finish, what was it, 17th this year or 16th, whatever it was. Like, we win. So imagine if we had a good manager, a good set of players, right? Bro, we would actually stand a chance in winning the league. Like, we can say that, okay, cool, we can actually win the league. Do you understand? But I just don't think Arsenal can say that. You know, Arsenal, they just don't win. Like, they win games, but they don't win the war. They win battles, yes, but they don't win the war. Like, we've reached 5 cup finals in the last 5 seasons. Like, 5 cup finals. Let me see if Arsenal's done the same. Cup finals. In the last 5 years, let's see that. So for whatever reason, the AI isn't helping today. I mean, either way, it's just not looking good, bruv. All right, NYSE. Let's hear it. Let's hear it. Let's hear it. US 30 is looking incredibly bearish on the 30-minute, even on the hourly as well. Let's see what it wants to do. Okay, stock opens here. Drop in. Yeah, it looks like a pretty big sell-off today. Well, it's going to be a big sell-off today for the stock market. That's what it's pointing towards right now, at least for now anyways. Okay, stretching. We're a minute in. Look at the S&P. Dow's leaving the station, boy. That is insane. Still stretching. Looking at the S&P, see if it wants to take out this low. Taking that. Okay. This gold doing not much. I think we'll probably have to trade the stock market today, you know, guys. I don't really fancy getting involved with EU or tell you what, we might not get a pullback right this second, right? If we can reach my target of like 43.30, I think 43.30 is not a bad area. Gold's coming down as well. I mean, technically, guys, you could try to take a little buy on gold, like continuation play on gold on the 5 minute. Right? You could go for this play here. Right? About 100 pip stop. 300 pip target. Like, it's possible, you know what I mean? Is it a little bit too high for my liking? Yes, it is. To be honest with you guys, it is a bit too high. But there is a buy available there. But I do think it's just a little bit too high. But there is a small buy available here. Obviously, this depends if maybe this setup kind of lines up with your own personal setup. So we'll see. For now, let's just chill, let's trade, let's read charts, and we'll go from there. Gold is making a move, guys. Slight little move, 40 pips. Not bad. Well, it does look like it's going to keep dropping as well. It's almost reaching the imbalance below. I want to see if gold can like just run down one more time. I think gold can probably just push down one more time. I'm keeping my eyes out for Dow. To be honest, that's what I'm more interested in for today. So we'll see if we can get a move on that one. But yeah, like I said earlier, you know, just a slight pullback. I did want to see us come all the way back up to Tokyo Sessions range, but we didn't, and you know, we've just faded and melted lower, which is fine. Which is A-okay. Gift says it's gonna be interesting this year. We need a good striker too. Yeah, you know, I low-key want to give Rasmus a chance and Xerxes as well. You know, I feel like a lot of players we haven't seen enough of them, and also you know the likes of Marcus leaving as well, Garnacho, and you know all these other players that need to go. Like, we need to make space, and at the end of the day, when you look at the market, yeah, who's really available, right? Which players are really available? Like, can we sneak in for Rodrigo? I doubt Rodrigo will join a club like ours, but can we sneak in for a world-class player, you know? That's my question. Can we actually do that? And to be honest, I don't really think we can, at least not in our current state. I don't think as a club we're that appealing. Alright, I'm going to take a little... it's probably a terrible idea, I can't lie to you. I don't like this trade at all, but I'm going to take a little buy here on gold. Lower your risk. I'm going to cover the low. And I'm going to target 300 pips. We'll see if we can get there, but right now GDX is dropping. So, you know, to my right here, GDX is dropping, so gold will more than likely drop with it as well. Yeah, GDX looks pretty bearish, man. It's been coming down. Okay. Trying to find a little something here for the Dow, man. If we can get something nice out of this. Let me set some more alerts for gold. Dow is kind of stretching lower as well. Okay, Dow's is dropping. Gold's pulled back up a little bit as well. The Dow is just dropping. Okay, cool. Alright, so the hourly candle is going to close in T-minus 20 minutes. The new 15-minute candle is also going to open in 5 minutes, okay? So if I'm looking for a move, I'm most likely going to wait for the new 15-minute candle to open. I want to see if that new 15-minute candle, if we can create, you know, the high of the candle, maybe potentially test this candle's low, like the foot of this candle here. If we can do something like that, then I'll be interested in continuing the shorts lower. We still have a little bit more to go for that target there of 43.30. That's going to be the target for today for the Dow, so we'll see how that goes. But as of now, nothing too crazy. Let's see what Bloomberg's saying.
Those being in play. When I think about the deregulatory framework that the president also has asked us to do, the Department of Labor has just issued 63 deregulatory actions. In Trump administration 1, 30 deregulatory actions were done over the 4 years. We've already done 63 in the first 6 months. And we're going to be looking to our companies to weigh in on this, because what does the president want? Modernization, streamlining, cost cutting. He wants to be an ally for the American workforce, not an adversary. And for far too long, you know, the Department of Labor or any other agency has not said, we're going to be your partners. So we will continue to go around the country. We will continue to lean in on interest rates, on investments from companies, on the worker, because we want to keep more money in their pockets. And we're seeing that consumer confidence, wage growth is up. So there's a lot of positive here. We'd like to see better numbers, but we're going to continue to double down so those numbers continue to grow.
All right, Secretary, have to leave it there. Really appreciate your time this morning. That is Labor Secretary Lori Chavez de Reamer. Meanwhile, we're back now with BlackRock's Chief Investment Officer of Global Fixed Income, Rick Reeder. We've already talked about revisions, but I want to talk about them a little bit more. There's a great stat from our Bloomberg Terminal Top Live blog that if you account for the big downward revisions to the last 2 months, payrolls have risen by just 35,000 jobs on average over the last 3 months. That is the weakest pace of hiring since the onset of the pandemic in 2020. If you were just taking the numbers that we get at 8:30 on the first Friday of every month at face value, it's a totally different picture when you get the revisions a couple of months later. And with that in mind, Rick, I mean, how much faith do you have in these figures?
So there's a lot there. So first thing I would say, you know, further comment earlier, 68,000 of the 35,000 is healthcare. Like that, it's just remarkable. Like you said, these numbers are softer. The one thing I will say people
15
say, "Oh
minutes,
God, this
15
economy
minutes.
is slowing dramatically."
You see
Wait
that new
another. I'm
hourly
sure people
candle
come
and
out with
that new
recession talk again, which will be
15-minute
wrong.
candle print as
The one thing
well.
I will say is you have an economy that is in a little bit of just wait. Like, well, you're not seeing layoffs pick up. You're seeing the claims data in pretty good shape. So listen, part of why I think we should cut rates is there is a risk you do get stall speed in hiring. And because I think that inflation is temporary, and I think you'll see these productivity dynamics playing. But listen, I'm not really worried about the economy. But listen, I think the rate threshold today is not consistent with what I think it should be. I don't think being restrictive today is the right posture. One man's opinion.
I mean, we're spending 7% of our GDP in deficit, so it's unlikely that we go into a recession, right?
Yeah, I mean, there's a series of tailwinds to the economy. And by the way, looking at the numbers, there was disappointment on Amazon today. These numbers, I mean, you think about what we just saw this week, the CapEx, the AI, the cloud, the new company that you talked about, new companies that you talked about. The economy, the foundation under the economy is pretty darn
stretching, guys,
solid.
man.
I'm not really worried about it. It's, it's created, I did a presentation yesterday called Potholes versus Sinkholes. This is, by the way, this period of time, July is historically the weakest month for payrolls, and actually August is second. So, and the data tends to be weak during this period. People shouldn't overstate that, what it means broadly. So, you go through these periods, you'll get some potholes. The fact that volatility was priced so low over the last few days was pretty remarkable. I mean, the ability to actually put some insurance in the portfolio for this near-term softness was pretty profound over the last few days. But I'm not worked up about, gosh, we got a tough economy coming. Particularly when you see the numbers you're seeing on CapEx and R&D spend.
I want to go right there to CapEx and R&D spend to some extent. AI CapEx has been nutso, like just eye-popping numbers, 85 billion from Google, 70 billion from Facebook. Next year they want to do 100 billion. Is that money going to really power the U.S. economy? Is that like when we built railroads and highways? Or is it something else, Rick?
Listen, I shouldn't overstate it, but I think that the amount of money that's going into more efficient technology. By the way, you think about what's going into space technology. You think about the power required to actually create this and what it means for different parts of the power infrastructure. Listen, the numbers, like you say, are staggeringly large. I went through it on this call yesterday. I went through the sheer numbers we're going to see and the acceleration of numbers you're going to see. What does it mean? And by the way, you can get into the discussion, is there some near-term inflation as he's put this money into the system? 100% possible. You hit the other side of the mountain when you see and by the way, I think we're seeing it today, some of the productivity enhancements. So the numbers are big, but they're not just the numbers you spoke to, but which are large. It's how do you think about compute, cloud, energy, et cetera. And I mean, listen, I think this is one of the most extraordinary technological evolutions, similar to telephony, similar to internet, similar to rail. I do.
Rick, we probably only have time for one more question. You've been so generous this morning. So I want to take a pretty dramatic left turn here and talk about the concept of privatizing Fannie Mae and Freddie Mac. There's been a lot of talk of that. Our reporting shows that President Trump met with some of the big bank CEOs this week to discuss that topic. You own a lot of mortgages when you take a look at BINC. That is the ETF that you managed. When you think about this possibility, are you concerned at all that it will be executed in a way that could cause MBS spreads to widen?
So a couple of things. By the way, y'all have been kind enough to give me a break, so I've been trading in this market, which is which has been exciting to say the least. It's like an incredible trading environment. So am I worried about? No,
15-minute candles here.
Whatever happens to the GSEs, I'm pretty confident that people understand the preservation of a housing market that, quite frankly, today could use some commercial push. I think is but to maintain some form of implicit or true guarantee I think people understand that has to continue, and so no, I'm not worried about it.
All right, let's see if we can get a pullback in this
15-minute
candle.
What happens, how it happens, how they build capital over
it.
time.
Of course, we also have the new
what those
hourly candle
entities
as well
look
that
like
can
in terms
give
of
us a
other
pullback
things at their disposal.
if we don't get this 15-minute.
The one thing I'm definitely not concerned about is, gosh, the credit quality of our mortgage position, our agency mortgage position. By the way, not concerned about our non-agency mortgage position either.
We're literally just heading in one direction.
So many things around HPA, et cetera, in the housing market.
All right, Rick, we'll let you get back to trading in this market. Good luck out there. Have a great weekend. That is BlackRock's CIO of Global Fixed Income, Rick Rieder. Meanwhile, let's take stock of this stock market. We're about 17, 18 minutes into the session, and boy, it's an ugly one. You do have some gainers right now, some companies fighting to stay in the green, actually about 112 of them. Take a look at what's leading in this market. On a points basis, you have Eli Lilly punching up here, AbbVie as well. Some of these interesting names that normally aren't in this plum position, but you have a lot of tech weakness today, and that's why you see this mix-up here, because NVIDIA currently down 3.5%. That's taking almost 18
down
points off the S&P 500. Amazon, Broadcom, Meta, JP Morgan as well, really dragging
Amazon's
this
down
market down. The
6
S&P
point.
500
Wow.
now off by
6%. Broadcom's down 3%. JP Morgan's down almost 4%.
Sector breakdown. It's going to be
pretty much red
similar.
everywhere.
There is going to be a lot of red on the screen. This isn't typically a screen that we look at. This certainly isn't the sector screen, but trust me, there's a lot of red when it comes to that sector breakdown as well, Matt Miller.
All right, a lot to talk about in these markets on the stock level for fixed income, labor data. Coming up, we're going to talk more about AI spending. The question is it going to pay off? Are we going to see, as you rightly asked, Katie, a return on investment here? Because Mag 7 companies are spending hundreds and hundreds and hundreds of billions of dollars. This is Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing,
to be honest,
you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Still waiting for Dow to do something, guys, man.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bercecci in Vienna, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening.
It looks like we'll probably have to wait for the new hour, you know,
signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Still gonna watch gold for now. It looks like gold wants to pull back on the hour.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and
But right
beyond.
now,
These are
there's
companies
nothing
that are growing
major.
their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
GJ is still dropping.
This is Bloomberg Open Interest. I'm Matt Miller. Let's take a look at what
Just wanna see
stocks
a little
are
bit of a
doing
push up here
after
from the
that
Dow, you
big
know?
miss for the non-farm payrolls number. You can see the S&P 500 off 1.7% to 6231. So still at a relatively high level, but what a big drop. The NASDAQ down more than 2% right now. And you can see that we have rates coming down, the 10-year yield at 4.25. The problem is a lot of red on the screen here, including NVIDIA. NVIDIA's off 3.5% today. Amazon is down 7% after really disappointing with numbers out yesterday. And then Figma, it's up again 1.5%. That's nothing, though, Katie, like the 250% gain we saw yesterday when they just left billions of dollars on the table after their IPO.
Yes, but they did have a big, beautiful one-day pop, so maybe that's a consolation prize there. We'll continue to discuss that at length throughout the day, so don't go anywhere. Let's talk about the big tech earnings that we got yesterday, though. It wasn't all about Figma. Bloomberg Tech co-host Ed Ludlow joins us now. And Ed, I actually want to start with Apple, because Apple had a good report. It was a beat and a raised quarter, but you can see that the stock actually turned lower. Where is the caution still lurking?
Yeah, it's the questioning of whether there was or was not pull forward in the June quarter because of tariffs and whether that will continue, right? So absolutely beat handsomely across every metric in the June or fiscal third quarter gone. And the guide on growth, mid to high single digits percentage growth going into the September quarter was a pleasant surprise. But Apple was very granular on the issue of how tariffs impacted consumer behavior and purchases of iPhones in particular. It was all in the month of April. It was largely in the United States, and it contributed just 1 percentage point in the 10 points of growth that they saw in that period. And during the call, analysts asked time and time again about pull in or pull forward. And the market this morning has given up the gain. Some notes out there and some questions about whether we accept that there wasn't this great pull forward or in, as it was quantified by Tim Cook and Kevin Perek.
I want to ask about Amazon, Ed, because you know, they did better than had been anticipated, but so everyone else did so well that they didn't do. They didn't keep up with the crowd, so to speak.
Exactly right.
And but how much of this is just a problem of Amazon's, you know, tap on, tap off spending? Over the last 25, 30 years, you know, they've shown an ability to ramp up when they want to.
Well, you asked the question earlier, when does it pay off, or will it pay off? You know, both of those questions are relevant in Amazon's case. The market's trading lower on an operating income guide for the current period that's seen as weak or conservative. But AWS did grow in the period gone. This is all about AWS.
Guys, you're watching the stream right now. Don't forget to leave a like on stream.
Even though it makes up the majority of revenues, the majority of operating income is cloud, and that's the domain that AI is coming. AWS growth of 17% is nowhere near the growth that we saw from Azure, for example. And so there's a concern that it's not paying off, but the spending commitment is more cautious too.
All right, Ed, looking forward to your program because there's a lot to talk about. Bloomberg Tech's co-host Ed Ludlow there talking about Amazon and Apple earnings. We've had the M's, we've got the A's. NVIDIA takes like months and months.
Stock market's gonna bleed as
Sit tight on that one.
sorry, cryptos are gonna bleed as stock market's going down as well, yeah.
Boss Jancic joins us as well as Craig Moffett.
So these drops that we're seeing is not anything out of the ordinary, to be honest with you.
When I got there, they have this.
Looks like there's a really nice short here on Bitcoin. Just punched above those highs. Interesting. Alright, Dow, you gonna give us a little pullback now? 3 minutes to the new hour open. Let's see. Dun, 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 dun. Dun, 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 dun.
this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace. Poor
Boy, look at that hourly
rich,
candle, guys, man.
Technology progress.
Serious candle.
My life.
You know, I kind of want to see us pull back up.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being.
Just gotta stay patient. See what Nas is doing. Nasdaq. Wow,
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television.
I think
Top
Nas
experts,
probably
great
got more
questions.
downside potential.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
This is Bloomberg. All right, new hours here. Ooh, stretching down. I see. All right, let's give the live stream 15 more minutes. Gold's now jumpy. Oof, gold's really jumpy. I'm gonna have to add to that.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Stocks are tumbling in early trading. Dow's off 660 points. That's 1.5% after the Labor Department released a much weaker than expected jobs report for July and revised the numbers downward significantly for May and June. CBS News business analyst Jill Schlesinger.
Those 2 months of revisions means that we had 250,000 fewer jobs than previously reported.
Economist
Spreads
Gus
are
Fauché.
There's a lot going on. There's a lot of uncertainty about the tariffs. We see government spending cuts that are having a drag. We've seen consumers turn more cautious.
Yeah, this is going to hit 43, 330 before we even get a
the ante
pullback.
in his trade
It's too
war,
strong.
announcing a new round of tariffs on dozens of countries, hours before his first round was set to take effect last night. Correspondent Ed O'Keefe.
This was supposed to be the start
All right,
of
guys.
a major reordering
So,
of global trade.
the target today has been hit.
Last night they said, actually, no, wait,
for
70
the
countries
Dow.
have 7 more days to try to
I'm
cut
not
a
going to
deal.
keep holding you guys.
And we're going to give
on the
Mexico
stream.
3 more months. And we're hoping
I
we get
would
3 more
still
months
be
to
interested
negotiate with
in
China.
taking some more
All of it
shorts
means that that
on the
uncertainty
Dow.
that businesses have been
And
seeing
gold,
across the
I would
country
still
is
like
going
to
to
see
get delayed
gold head
even
up
more.
higher.
New
Obviously,
tariffs
this is
take
the
effect
5-minute
next Thursday at rates
time
of up
frame
to
setup.
50%.
We're
A 28-year-old
looking
teacher
for
just
the
made a
highs
court appearance in the murders of a couple at an Arkansas
33.70.
state park.
Around that, if we can get 33.70,
Andrew
then we'll see.
McGann was charged with 2 counts of capital murder after he was arrested at a barber shop.
So Money Day,
CBS's
thank you guys for
Omar
joining me on today's
Villafranca.
live stream.
Investigators say McGann stabbed Clinton Brink first, and his wife rushed their
hopefully you
daughters,
guys took the
ages
little
7
gold buy
and
that I
9,
told
to
you earlier
safety.
as well.
When she returned to
Money
help
Day.
him, she was also stabbed to death.
They absolutely